if you look at US ultra short treasuries, these are offering around 4%. So they are the super low risk and super steady fixed income instruments that you can rely on. Now, when we look at US aggregates and also securitized credit, they also look quite attractive. They are yielding around 4 to 5%. The spreads, which is essentially a valuation metric, is actually quite close to historical average. For investors looking for high yield, you can look at high yield bonds or emerging market bonds. These are giving you 6 to 8% in total yield. However, also note that these are not cheap anymore. If you look at the spreads, they are actually quite tight. And for investors who can access private markets, private credit also provides a good alternative, which yields around 8 to 10% that compensates for the lack of liquidity. But remember, yield is only part of the story. Different asset classes brings different risk profiles. So for example, comparing yield versus volatility gives you a better idea of how much yield you're getting for the risk that you take. In this month's CIO Insight, we dived deep into the topic of good yield hunting. The link to the full article is below.